Hi, thanks for visiting my channel. Topic of today's video is how to transfer recreational or rental property to next generation. Before we get started, for anyone new to this channel, my name is Tanveer Chaudhary. I'm a certified financial planner and real estate investor. I make educational videos regarding wealth building, financial planning, and real estate investing. If you think you learn at least one new thing from this video, all I ask is to like this video and subscribe to this channel so it encourages me to produce more valuable contents for people like you. There are basically two ways to transfer recreational or rental property to next generation. First way to leave property for the next generation is by leaving the property in your will, and this is the most common way of leaving the property. Everyone should have a will, but if you die without making a will, the Canadian province you reside in will decide how your assets will be distributed. There is a common misconception the government will take your assets and estate if you die without making a will. This is not true. What happens in Ontario when you die without a will? That's a topic for another video. If you leave principal residence to the next generation in your will, there is no capital gain tax payable by your estate due to principal residence exemption under the Income Tax Act. But there are probate fees or estate administration tax payable by your estate to the provincial government. In Ontario, the current probate fees are 1.425% of your total estate, or $14,250 for the property worth $1 million upon your death. You can avoid probate fees by not leaving property in your will so it does not go through your estate. You can do that by gifting the property in your lifetime or adding the children as joint owners to the title of the property. Please note, adding one child as joint tenant to the title of the property can cause other problems with estate equalization if you have multiple children. If you're leaving investment property to the next generation in your will, there is probate fees and capital gain tax payable by your estate in the year of death at your marginal tax rate. If there are insufficient funds in your estate to settle the tax liability, it might create tax burden for your children, and your children might need to sell other assets to cover the tax liability. To mitigate this possibility, you can purchase joint loss to die policy to insure you and your spouse with the face value of the policy matching the estimated future tax liability. On the death of first spouse, the spousal rollover rules will defer the taxes payable if the property is jointly owned by spouses as joint tenant with the right of survivorship. On the death of second spouse, the insurance proceeds will enable the state to pay the taxes due. Second way to leave the property to the next generation is by gifting the property in your lifetime. This will enable you to reduce the size of your estate and avoid probate fees, which are currently 1.5% of your total estate in the province of Ontario. There is no gift tax in Canada, but there are capital gain tax on what's called deemed disposition when you transfer or gift property to your children. There is no capital gain tax payable if the property being gifted is principal residence due to principal residence exemption under the Income Tax Act. However, you have to pay capital gain tax if the property being gifted is recreational or rental property. You can mitigate the impact of tax liability by implementing what's called capital gain reserves, so the transfer of property is spread over 5 years. This allows you to realize the gain gradually over the period of 5 years to avoid a larger tax bill in a single year. You can achieve that by drafting a promissory note which would indicate that you will collect the property sales proceeds at fair market value over 5 years. There are no payment actually needs to be made, and promissory note can ultimately be forgiven while still deferring the tax liability. You should always gift the property at the current fair market value and not lower than that to avoid double taxation. You can also use family trust structure to transfer the property to the next generation. Creating a trust will allow you to transfer the property while you're still alive, while avoiding the probate fees when you die. Creating or maintaining a trust could be complicated and costly, so advice of an estate lawyer should be taken. If you have multiple children, gifting property in your lifetime might make it more complicated to equalize estate. So you might consider selling the property first and gifting cash to your children to equalize estate. You can watch my video about how to gift property to your children in your lifetime after watching this video. That's all for this video. If you think information like this can benefit someone, please share this video with somebody you know. Also like, comment below, and consider subscribing. Thanks for watching and see you in the next video.